Thank you very much. And thanks for giving me the honor to present to the beautiful future of this country. And I'm hoping that all of you will make it into this wonderful sector. Thank you to Pumi as well. I was just listening to a lot of her presentation and how inspiring it is. I also spent time, but only a year and a bit in the continent, representing as an investor or a client. Really looking to doing what they do. I spent about a year and 4 months, 2014, 15, and not it was difficult. So I know exactly what she's talking about. But that it itself is that it's just by my way of introducing myself. My name is Kgaugelo Mamabolo, as Portia said. I'm currently representing a couple of businesses because I've left corporate in 2015. So the leaving the opportunity to travel the continent was not because I didn't like the continent. It was quite a lot of fun, challenging, but because I was ready to become an entrepreneur, which has always been what I was destined to do. But you have to spend your time in the corporate sector to get that CV, to get that experience, to get that confidence, to understand the various aspects around what you want to do. So I'm currently a director, an investor at Emerging African Property Holdings. We have an industrial logistics fund and an asset manager that drives that, and I chair that asset management company that manages it. Alongside one of the big pension funds, we invest in that fund. My other life, I'm director of what we call re-infrastructure managers. Linda, you can start my presentation actually, just from the first slide where they can see these names I'm talking about. Yes, there it is. So in the infrastructure managers, could go back, we actually focus on what we call underserviced retail markets. This includes rurals and the shopping centers. So this is actually one of the assets that is currently the ones that's performing well. So between that and the logistics, I think I'm in the right spots. In my other life, I also dabble as a private investor in affordable housing, and that's where I've started. So I'm giving you that background to show you that you can wear many hats. But where do I come from? I didn't start off doing property finance. I've never actually done property finance, but I do go and raise capital to be funded. And I'll get into it just now. I studied town planning. Before that, it was actually BSc, which I didn't like. So I moved to town planning. I also didn't understand what I was going to do with town planning. It was just because I had to do something. I had to stay in university and I didn't know what else to do. And I got exposed to property in that field. And then when I was about to finish, one of our lecturers said, somebody in the property sector is looking for somebody like you. I don't know what I did to deserve that, because I thought that town planning was very far from what I was going to do. And then I started off in property research and economics, and I was exposed to many investors in terms of the kind of work we did when I worked at Verily Consulting. I then moved to a company called Investment Property Data Bank, which is called MSCI now. That company, what they will do is that they will take information from the various investors or the various companies that were investing in property and benchmark their performance to show returns and put some nice market research. Pumi said, in the continent, there is no such things. We are like in South Africa that we've got those. So MSCI is where we go to go research how our investments are performing. So I'm giving you all that, and then I moved to asset management. I then worked for a company called Liberty Properties back then, into heading their investments, listed investments at the time, which included shopping centers such as Sandton City, Nelson Mandela Square, and Eastgate as an asset manager representing Liberty, which was the investor. We then moved to Stanlib, which housed the asset management of the Liberty portfolio. And there I got exposed to asset management as a whole in terms of other investment classes. Now, Stanlib as an asset manager, they must go raise capital from the capital markets. I've never had to see something like that, but I didn't have to do it myself. All I had to do was produce the assets or manage the assets that we used to invest in, and some of the developments as well, and report to the client, the investor. But somebody had to go and raise the capital for us to put money in it. So this goes to my first slide: investing in property. Why would you want to invest in property? You want to invest to create wealth, to get an income return, and then also get the appreciation in value. So when you sell the property going from 1 rand, 10 rands, and then in between, if you're using debt, as long as that debt is paid, tax is paid, you can get some income from it. That's what they call income returns. In the real world, they say we're paying investors dividends. So you're really creating your wealth. You also could be investing in other asset classes. So it's a portfolio diversification to invest in property. We also have, at the end, I'll talk about indirect investment into property. But there is a challenge, right? It's you need lots of money to invest in it because I don't know how much the cheapest investment is right now. Let's just say the cheapest you're gonna go into is 100,000. You don't have 100,000 lying around there. When you go up towards the retails, you're looking at even more value. You're looking at nothing less than maybe 20 million in terms of just the smallest, let's say, retail assets. So you do need that capital. Also, when you then invest in it, how are you going to find this money? Where are you going to get it from? And I'm going to go in as well is that the nature of our countries and in South Africa, especially Black people, we don't have trust funds and all those things to assist us to be able to invest in things, right? We also have Black tax. So you start off with a negative sometimes. So when are you even going to get to a point where you can now start investing in property? But the solutions are there. You must find the right opportunity. Then also very critical, you can't just unlock money from this asset. It's tied in if it's direct. So you need to have money right now. You need cash flow. So this is a long-term investment. You can't even look at the returns possibly within 5 years. You're looking more towards 10 years. So what do you do in the meantime? Where do you get cash? And hence, that's why property, the nice thing about it is that you can have a job and you can still invest alongside it. It's just how you're going to balance. But you being here is that you are studying in this field, in built environment, and property investments is going to be part of your life. Whether you're a developer, as Pumi said, or an architect or an engineer, at some point, whatever you're doing, you're going to be reporting to an investor who's putting money to do that project. So without investors, there are no jobs in this industry. And of course, without the other businesses that property investment houses, then we don't have jobs. We call it the value chain. So the value chain will be there's an investor who gets funded and has an opportunity, whether it's just buying an income producing assets or a development. Along the way, they will hire asset managers, property managers, facilities management, leasing people, debt collectors, finance people, property developers, asset architects, quantity surveyors. So it's a whole value chain that starts with property investments. We can move to the next slide. I'm going to try and make up time. So if I'm a bit too quick, you'll forgive me. But what I've done is that all these slides have got lots of information. So even if I don't go through everything, you're going to be able to see all this. I did it deliberately because I knew that our time is limited. So who invests in property? It's individuals. I can also, as I said, I've got a life where I individually invest in property. But where I do that is where it's more affordable, such as housing. It's much more affordable than me going to buy a shopping center or an office park or industrial. So in my other life, with the industrial fund, I do it via a company with business partners. And as I said, we partnered with an institution. So you also have, you have property companies or trusts, family trusts also invest in property. There's a difference between investing individually and investing.
Kgaugelo, we lost you. Are you there?
Sorry, sis, I'm using my phone, so whenever a call comes in,
not a
it's sort of
problem.
like super. Sorry, I've killed it. But you didn't miss anything. I stopped. So if you're using a company, there are tax benefits to it and trusts. So what you'll do is that with the company, you can get the individuals to buy shares in that company, and that company will be the one to buy the assets. But also what it does is that it helps you. If I have 10 rands and the opportunity is 40 rands, I can get 4 other people with 10 rands, we buy shares in that company, and then we can actually play the bigger role. We always say that 0 of nothing is worse than 5% of 100. So that's why collaboration becomes very important in terms of this game. We've got the listed companies, the REITs and other listed companies. The difference is that the REITs are income producing companies with limited development. There's a specific way they behave, while other listed companies could be those we've got a development focus where the returns come much later. They don't give the dividends the same way as the REITs would do. But don't worry about the complications of now. I'm just giving you information. There's Google. Believe me, Google will even give you some of these things. Go to the JSE and go read up about them, how they work. The information is there. There is a REITs organization, and CISP, they are a signatory to the property charter. So if people need to get access to Joanne, I'm sure you can link them up to read more about the REITs, because some of you will be employed there, whether you're an asset manager or a finance person or you're in the development team of an Investec or a Growth Point or Hyprop or Redefine, some of you will be have a career at some point. You've got financial institutions, for example, Nedbank partners with Linda. Go back, we're not there yet. Sorry. If you go back to the previous slide, please. I don't know if we lost the presentation.
Okay, it's coming just now.
Thanks, SP. So yeah, some of you will be employed. Financial institutions also have some sort of investment in property. For example, Nedbank can be a partner with a company, and they take up what they call equity positions. So even if they do debt, they can also have a little portion where they will also come in as an investor. I think we've got this is not the same presentation, Lindo.
It's the same. It just needs to move forward. Does Lindo move forward?
Or back. I think this is the next one. Yeah, because the Q&A does not look like my Q&A. Yeah, and then you've got, I'll continue because you'll see the information later. You've got the retirement funds. Retirement funds, what they're important is that this is where your pension fund for like government or even, let's say, municipality, or where any pension funds or provident fund that any business will have, any sector, that money where they put in will go into investing in various asset classes, and property is also one of them. Insurance companies such as Sanlam, Momentum also invest in property as part of their unit trust. Then we've got what they call private equity funds, which are very specific funds that are private, but they will put money from the pension funds and others, also invest in property. Government is a big owner of property. It's probably the biggest owner of property in the country. And with our world is that the public, which one is this? Is Portia, our friend at the ones that are, you know them, your friends at Public Works. Yes, Public Works.
Public Works, yeah, Public Works and Infrastructure.
Yes, they're the big ones that take care of government land. And then the SOEs, for example, Airports Company, a Transnet, a Prasa, those are also custodians of property in terms of the things that they have to deliver, the ports, the airports, and the likes. So moving on, we've lost our slide, our presentation.
Or is it not visible on your side, Ms. Kgaugelo?
The presentation I'm seeing is not the same one. This is Tato's, I think.
Oh, I think it hasn't updated on your side, because on our side is the property investment institution slide.
Okay, can you then move on to the property investment sectors? Because I've got it on my laptop, so as long as the everybody can see it, can you confirm that?
Can everyone see the property investment sector slide?
I think if Sis Portia says yes, thank you very much. Oh, many hands. Thanks all. Thanks for being patient. So the different property investment sectors on the right here, I've got what traditionally would have been where the big institutions have invested in. When I started in the industry in 2001, many years ago, we literally had a couple of big funds. Maybe there were 4, the life pension funds, the private companies, before even the REITs became a thing, where mostly they would invest in office, retail, industrial, a little bit of hotels. But now we've seen the increased interest in residential. There's some who now have got a residential focus, not as big. Student accommodation is coming through. The hospitals are becoming a thing. And then there's also education. It's also increased there. On the left of the columns, I've literally put in where it's easier for smaller companies or individuals to invest in which has become like a flat. You want to buy a flat there and rent it out, a house. And of course, now what we've got is that we've got affordable housing is a big thing. There's also what they call social housing, where government provides a grant for a developer to be able to subsidize those development, and it targets for a specific income between 3,500 and 15,000, and you as a developer get those grants to be able to. It's part of government's delivery for the shortage of housing. The shortage of housing is quite huge in South Africa, and of course, student accommodation. Lots of smaller developers or smaller companies who were previously, let's say, construction companies or they used to work for big corporates are coming into the space. And the nice thing is that we've got specific funding instruments that are coming through to support this. NHFC, GPF. NHFC is the National Housing Finance Corporation. GPF is Gauteng Partnership Fund. We've got what we call TURF. So we do have specific products which are helping us as investors because they're being financed that are coming into the space. You can also work at those institutions I mentioned, by the way. So between investment companies and property finance who are linking up to each other, there's lots of scope for people to get employed in. And when I came into the industry, we didn't have this landscape of companies or this various part of companies that we could all go work with. Only as we're going and the market is growing have we seen the increase of these institutions, which are now employing more people, because we know there's more universities. You need to have more places you can find jobs in. And traditional property companies are not the only ones. So the next slide looks at the process in terms of how you make decisions. Also, you can read this in your own times, but literally the top part is that you must determine your appetite, your risk appetite. You may think that buying in the CBD is cheaper, but it comes with problems. Also, you must determine whether you want to develop or buy an income yielding property. Developments are very risky and you're going to wait for a long time. I'll give you an example. There's a project we've done. We bought the land 8 years ago and only broke ground this year in April. So you can wait, and there's a lot of money that needs to be spent in it. I'll come to that slide now. Then you will then do your analysis, look at the market studies, do your due diligence. You need evaluations, independent valuation, to see that you're buying at the right price. You put a feasibility together. As Pumi said, in the continent, you don't have sources of information, but in South Africa, luckily you do have SAPOA, you've got Shopping Center Council, you've got MSCI. Even the property charter will have information such as rentals, capitalization rates, some valuation costs and expenditure for you to be able to input into your model. Then you take that and you go and find finance, go look for finance, whether you are using a bank or using those institutions I mentioned, depending, and then you make your decision, and then you will then monitor your performance of your portfolio. We can move to the next slide. So where are the sources of finance that you can get? In investment, there are two things you need. Luckily, somebody can go and just find 100% debt for you, but that's almost unheard of, right? It's very rare for that. So they will ask for what they call equity, which is what you hear something called skin in the game. So if a financer, let's say, and I'm going to use Nedbank again, not because I'm profiling them more, but because it's just easier for my conversation. If you go with them with an opportunity, it could be residential. They will then say, look, we'll give you a certain percentage in debt, but we want you to put equity. They say, we want to see your skin in the game. What do you have to show that you're committed to this? Now, typically, let's say on average, if it's a good investment, there would be, let's say, 70% coming in debt, and then they'll ask for 80%. Sometimes for first-time home buyers, you can even go to 10%. So it varies. But the rule of the game is that when a bank perceives an area or a focus to be high risk, they will give you a lower percentage in debt. Now, I'm going to go back to the CBD, as we know what has happened. People are like, it's risky to put in money there. Maybe back in the day, you could get 80-20. But now the bank may say, I'm only going to give you 25% in debt. Where do you get the rest of the equity? So what you'll have in between is that you've also got people who do junior debt. So a structure such as Gauteng Partnership Fund, GPF, will give you, they may be able to raise 40% from the traditional banks for you. They will give you maybe the remainder of 30% for you to then go fund your 30%. But they've also got some structures which recognize that they are also entrants into the market. They will even raise as much as only requiring 10% from you. And that goes a long way in terms of investing in property. We also got what we call mezzanine debt. Mezzanine debt is not like your traditional senior debt. It's sitting somewhere in between, solving the gap between the equity that you must put in yourself as well as the senior debt. So using the same example to say, I'm going to give you 25% as a traditional bank because I'm taking a high risk on you. The mezzanine guy will say, okay, fine, I will top up by a 50, 15 or whatever percent, maybe between them they can make up to 50%, and then the rest you must go solve for yourselves. But we've also got development finance institutions, and I've mentioned NHFC, there's NEFs, the GPF is such a structure, the SHRA, which can also be an in-between in terms of how that funds you, and that deals with the financing of investment. So in the equity, also when you know that you've gotten all these amounts from the debts, from the funders, from the banks, from the MES funding, from the development finance institutions, you're still going to be a bit short because it is a large individual value. There's also nothing wrong with when you've had experience and you've been around like me, now going to those pension funds, the retirement funds, or going to asset managers who allocate their money to say, look, I've got a portfolio of retail assets that look like this. I've got debt. I've got ABSA that say they can give me a debt of 70% of a project that costs 200 million. I need the 30% of it. You as an institutions can come in as the investment partner. Me as an individual, I can get a 5% of the stake. It's still a lot of money. So there's ways that we play around these days in terms of going to fund finance. When I was in corporate, I didn't know any of these things. Only as an entrepreneur, I'm able to now be able to talk with confidence to say it's doable. But guys, it's not easy, because if it was easy, everybody would do it, right? We'd have more entrepreneurs than people employed. It's patience. That salary you used to get, if you used to get 3 million, forget about it. It is not even close to 1 million. You have to put in your own money, that equity into this thing. So it's a patient game. To go and raise capital with the pension funds or asset managers, it's a long time. It can take up to 2 years when you start the opportunity, and then you must, it's not easy, but it's doable. You must believe. And the fact that we've got all these institutions now coming into the system now saying we're going to provide the alternative debt structures, the mezzanine debts, and the development finance guys I'm mentioning goes a long way compared to where I came from 10 years ago or 20 years ago. This is Portia, you're getting it, right? You're seeing the change, right? So we can then move to so when you invest, you're gonna, like I said, you can invest in income producing development. And what you're gonna do is that there's a property investment cycle to it. This is the next slide with the bubbles. You invest, you acquire the opportunity. In between that, there's asset management and property management that you must do. And then you must decide whether it's performing well, you wanna sell or redevelop, add on, and that's it. But the big challenge for us, and we can go to the next slide, which has got a development project cycle. I'm glad that Pumi came before me to explain developments, and I won't go into a detail. But what I've done is that I've put through, and you must read them in your own time, in a project situation, all the blocks in blue that you'd be seeing in front of you. Sorry, I can't see what you guys are seeing, so I'm hoping that we're in the right slide. This is slide
Okay, you can take over a little bit. I'm currently on slide 45. Are you able to see it?
the one called in projects.
Direct property investment cycle. So not that one?
Yes, that's the one.
Oh, in projects, the challenge to access.
Yes. Okay. So the one before about the cycle is that I was just showing that you acquire, in between your asset management, property management. At some point you decide, do you want to sell it or redevelop because it's not making as much money, it's old. So this particular slide is where I'm showing that the bigger challenge around financing and investment is when you're going to develop a new project or a redevelopment. So those boxes on the left show the initial stages of a development. I've got what I called a pre-feasibility financing portion, which is the first on the left. This is where you're going to do your market research. You're going to purchase the land. There's a valuation that goes alongside it. Sometimes you may be going into purchasing land that is on the outskirts. It's not even zoned. It's not even a township yet. So there's going to be lots of municipal processes that you go through. But in that time, there are holding costs that you're incurring as well, which is a rate and taxes. You have to pay them as well. So between the market research and buying the land and rates and taxes, it's a pre-feasibility. You have to acquire the opportunity. There's money to be spent. Who's helping us with that money? Most of the time it comes from our pockets. But we are looking at ways to see if maybe people like the DBSAs and the likes can help in terms of just helping those processes, especially for emerging investors or new entrants in the market who've never done this thing and had money. Then you've got where you're going to get, Pumi mentioned them, a professional team, a quantity surveyor and an architect to design this for you and cost it. And maybe some engineers are going to have to come in because they, what you call geotechnical studies to see the land condition for structures. That is also a cost. This is before you even go to the bank to say, can you fund this thing? So, and in that time, you are still paying rates and taxes and holding costs. You may go to do some municipal processes where you must approve the SDPs, the building plans before you even go to get, while you are going to do your debt raising. You go in debt raising, the bank is like, okay, we're going to give you a term sheet on condition. We're going to do a due diligence. That's also time. You're still paying your rates and taxes. You're still doing whatever. And you must, so all that money is your equity that you require. So what they will do is that 30% I mentioned as equity, all these costs you've been incurring, it goes towards that. So if land takes 10% of it, they take it out of the 30%. But still, after all that, you're still going to be short of something. You're still going to top up once you get the funding. So that is the challenge in terms of that. So it's not an easy one. I hope that some of you have got very rich relatives who can help you while you attempt this. But you know what's nice is that I'm also seeing a lot of non-property people that are using up these opportunities and coming to us. So, and the good thing is that, guys, when you get into this industry, and people mentioned that you must go to WPN to support SIBIP, you have to be talking to people, finding out. You might just one day be lucky that you are so young and you come across, maybe one day I'll have so much money. I'm like, you know what? I'm going to take 10 new entrants into the industry and I'm going to give them an opportunity that because I've got a project and I've got some of the equity, I'm going to say to you guys, just come with 100,000, participate. Like I said, 0.5% is better than zero of nothing. So it's doable. But you gotta be smart. You gotta be out there. You gotta be bold. You gotta come and say, I want to do it. And I've seen people do it and say, I've just acquired the land. I've done a bit of town planning, but I don't know where else to go. How do I come up and raise funding? And they've come to us, and we are helping them in terms of unlocking those things. So moving on, I'm almost done. Moving to the risks and challenges now. I've already talked about the challenges part at the beginning. But when you're looking at investments, you also need to consider socioeconomic, the bigger picture, economic risks as well. Right now, with a country like ours, where we're not really exciting, property has also taken a knock. We usually say that property lags the GDP by 10 months or 12 months, but now it's been lagging. It's very close because we've been through a down cycle of our economy. Interest rates matter for funding. Right now, there are some institutions saying to the people that invest on their behalf to say, don't do debt until the interest rate cycle turn around. People are struggling who've got debt right now. They're like, no, you can refinance in the future because the interest rate cycle would have been down. So that impacts a lot. Inflation impacts your costs, operating costs. The higher they go, if your income is not increasing at the same rate or similar, also it influences your leases escalations. So that's also there. Financial markets volatility, they impact more the listed companies more than unlisted. You've also got government that is a bit of a challenge. Municipal approvals can take long. There are some very inefficient municipalities, and it's even regulations can be a problem. Since Portia, in terms of the work they do at the property charter, in terms of just having a policy by Public Works on implementing for transformation. We've been trying to get this off the ground forever. So regulations can also be a nightmare. Some of the policies you have in place can also not work in your favor, or they can work in your favor. For example, we've just gotten in the past year where a new act, the Gauteng Township Act has come into place, which starts to unlock opportunities in backyards and some of the developments in townships. They even put a fund together. So some things can be ticked, some don't have to be. You also need to know that you've got the right asset managers, property managers to do your work for you, because sometimes you may find your property manager is not the best at collecting debt, and you can have high debts in your portfolio and not be able to service your portfolio. But also you can be in a place where that area is declining, so your rentals can go down. We saw it with the CBD, where people moved out and those values went down. People didn't want to be there. So it's very important to note that your income must be able to service your debt. But once again, It's a challenge. This is large individual value. How do you access funding, the right opportunity, liquidity? But it's not the end of the world, because there's some other ways of investing into property. And that goes to my last slide. The indirect property investments. You can go and look at the stock exchange, pick up a couple of REITs and take a position on them. But you're not an expert. So what they also have is they've got indexes at the JSE which tracks specific property. They'll choose a selection of properties, and there's a couple of them. It's not just one. They can have an all property index, or they can pick the top 40 and you can invest in that, or you can go to a broker that can invest on your behalf in terms of choosing these ones. But also there's also, and here I think at the REIT you need minimum of about 10,000 rands, and then but you also have what you call the asset managers products, the unit trusts, which some of them also invest in property, and there I think the starting point is 5,000 or 500 per month. So it's not, you can't find a way to make money by starting indirectly. You build up a portfolio, those unit trusts give you some interest, and maybe one day then you'll find your 500,000 to then call Thomas and Sis Portia and Pumi to say, hey, let's club in together. We need to raise $1 million and let's go build a little residential affordable housing there and there. And that's where my story ends. But as I say, any one of you can become investors. But the nice thing is that, as well as that, what I'm encouraged is that you're going into a system where there are more hiring companies than before we did many back years. So don't think straightforward and say, because I'm doing property management, don't think that this is where you're going to end up. The industry, you can actually find yourself sitting in a investment company, in a REIT, in any way, in a property development company. Like Pumi told you that she was a journalist. Hey, here she is heading up a construction and development company in the continent. So the world needs smarter thinking. You need to adjust. You need to be saying that if I want to be a property investor, maybe after this conversation, I'm going to ask this Portia, can you give me Kgaugelo's details? I can also give you access to the market in terms of, if you want to go into a career in this industry, we can guide you in terms of, go look at this area. When you're putting out your CV out there to a broker, to a resource person to put you out there, be very specific. I'm looking for this opportunity, because sometimes, like me as a town planner, somebody said, I'm looking for a town planner to come into a property business, and my lecturer said, here she is. So be very intentional, show your energy. Even your own lecturers there in your universities know us. So speak to them, say, I went to career day, we heard about these things. Please, can you guide me as well? It doesn't have to be ending here. And if we need to come do more presentations for you again, please do call on us. Thanks, Ms. Portia. It was a bit all over the place because I couldn't see the slides, but I hope that it came value.
No, you covered it absolutely well. Thanks, KG, and thank you so much. I told you guys that we've got such seasoned professional speakers that, you know, you're going to walk out of here and be able to say, really, is it all, or is it everything else? It's like they've given you so much more sources of finance, direct, indirect property investments. We've covered investment in all other sectors, the decision processes. We told you we actually have you covered in this. So thank you so much. There is a lot more, I think, as KG has mentioned as well, that we kind of touching a little bit, because we are just only guiding you to actually be able to see that there is a lot more around this area. So I hope you actually were able to gather that. Does anybody have any verbal questions? I don't see anything on the chat at this point, and I'm just grasping and looking at it. Okay, how do you contact you? You've got, yeah, I see the one that how contact us. We can actually just make sure you register. We'll have you your contact details, and then you can communicate to us. Do you think the student accommodation is a viable entry level property investment? That is one, KG. Let's look at the other. Let's look at the other so that you can answer them all at the same time. Concerning the method of funding, there's recently a booming way of doing things, which is crowdfunding, precisely known as property stokvels. How much risk would one be getting into, knowing that most of such are not necessarily regulated? So take those two questions, KG.
Okay, so the first one is around student accommodation. Now, the student accommodation, the nice thing about it is that, like social housing, We also got the NSFAS model, where actually if you had to go and find a relationship with the university, it's easier then to get the rental coming from the university than you going to source students yourself. For me, is that if you can find, if as an individual, you can find a partner, a big brother, big sister partner. We do have funds which are specifically looking at student accommodation. A lot of the times, they will look at opportunities come from the developers or people who find the opportunities, will bring it to them and say, I don't have the funding for it. Please assist me. And as I mentioned, is that you can actually remain with a very small stake of it if it's too expensive for you, but that bigger partner can be there. But I've also got, and I don't want to like sound like very, very optimistic. I've also got individuals who are in the industry, who've been in the industry for ages, that are also struggling to get funding for it. So the opportunity can be there as long as you can find the funding. And this is for anything. But yes, it is an easier sector to get into than a commercial for individuals. But it's just how you're gonna maneuver to get the finance. And you can actually come and speak to me, and I can give you a bit of guidance in terms of where and how. Yeah. And then, and also people like GPF also would be funding some of the student accommodation. So there are products there, but also how you, when you go have an opportunity, it's not a page. Do some work, show the skin in the game. Otherwise, somebody's going to take the opportunity and say, well, I'm going to give you money to walk away. Some of the big brothers can't do that. But you need to, if you want to own the asset, if you want to go speak to somebody to say, how do I not let somebody steal my opportunity? You can also come to us. We'll guide you. We'll help you how to speak around that. The second one was around Stokvels. This is Portia.
Yes, the other one is Stokvels.
Personally, I'm not a Stokvel person. I've never really been, but there are Stokvels out there, increasingly in property. For me, like anything else that manages your money, if I go to a broker or a unit trust, they regulated you, right? So I will trust that, and I can also look at their track record online or ask them for information to check how their performance have been, and we know the name. Yes, you can lose money when the market loses money, but also it's a long-term game. For me, as long as the person who's looking after your money, you must do your investigations, their track record. Don't just go nilly-willy, because people can steal money, but also you want that wherever they put in their money, if it's in property, maybe they're putting it into the unit trust on your behalf. That's also fine. But whoever handles the money is the risk person. So there must be experience in terms of understanding the property. Whoever they use, it must also be a credible source. And also you must trust that they will not take your money. So increasingly, yes, Stokvels are there, but you must also just do your homework. But for me, the crowdfunding, I would encourage is that you and a group of other people, you manage your own money. You get together, you do proper company structures, you do shareholder agreements, you protect yourselves, and then you can go alongside to go and look at the unit trusts or the other things, or come partner with the big brothers to be able to buy a small stake in it. But just be careful whatever you do. But I'd rather you go regulated than not in terms of where you put in money.